Good afternoon, and welcome to today's continuing education webinar offered by eMoney. For anyone not familiar, eMoney is a market-leading technology firm offering comprehensive planning-led solutions that delivers scalable, interactive wealth management solutions to help transform how financial professionals, firms, and enterprises operate their businesses and serve their clients. Joining me today and taking us through most of our session is Mr. James Werner from Silicon Hills Wealth Management. But before I turn it over to James, I have a few items to review. As you are joining, you will notice all attendees have been muted and chat has been disabled. Instead, we ask you to direct all questions using the Q&A feature found at the bottom of your Zoom screen. We will be addressing as many questions as we possibly can at the end of our session. Today, like all of our CE webinars, is education and not advice. For any specific questions about a client's unique circumstances, please consult the appropriate resources. A reminder about eMoney's continuing education program. Webinars will typically occur on the first Thursday of every month, subject to change for holidays and company events. Webinars will be 60 minutes, where attendees can earn 1 CFP CE credit. We kindly ask that you remain on the sessions for the entire presentation, which includes the questions and answers portion, to make sure you earn your credit. Our CFP program is aimed at CFP professionals. eMoney will report attendance to the CFP board and using the CFP board ID attendees provided upon registration. If you did not supply your ID, or if you're unsure if you did, please email ce@emoneyadvisor.com. For those who hold other designations, in addition to the CFP marks, we send a certificate of completion that can be used to self-report your attendance and receive credit towards the designation that accepts CFP CE credits. Attendees will receive a copy of the slide deck along with a link to the recording of today's presentation. We kindly ask for your patience in getting these out to you, as it can take up to 2 weeks to do so. Our guest speaker today, James, is a certified financial planner professional with over 25 years experience in wealth management and personal financial planning. James takes a special interest in areas where finance intersects with daily life. James graduated from the University of Texas with a degree in business administration in finance and economics. He acts as an advisor to the UT Plan Giving Council and serves on the Advanced Planning Steering Committee for eMoney Advisor and speaks frequently on philanthropic planning. James, thank you for joining us today. Please take it away.
Thank you very much, Chris, and good afternoon to everyone, and thank you for joining us. We're going to start today on a topic that's near and dear to our hearts here at Silicon Hills Wealth, and it's basically a client's philanthropic journey, because we believe that every client has the ability to be, on a philanthropic journey, not just a charitable journey. And we don't necessarily believe that that's tied to the size of their net worth or tied to any other particular thing other than having a really solid plan that they can move forward and act upon. So we're going to go through kind of how we work through that journey with our clients, some of the things we've learned, some best practices, tips, and to-dos. And then once we go through the qualitative portion of it, I'll turn it back over to Chris. And what Chris is going to do is give you some actual tactical things that you can do on the eMoney software to actually look at the structure and how these things model out, so that you can take the qualitative part and marry it to a quantitative solution and really do a good job for clients. And then at the end, we'll hit as many questions and answers as we can. If you'll do, like Chris said, just keep clicking the Q&A, put your questions in, and we'll sort them out and get to as many as we can. Again, thank you for joining us, and let's kick it off. So when we think about charity, for most people, most charitable contributions that are made by request or because of an event. They're not things that we plan on. I mean, if we look at the explosion that happened in Beirut, if we look at COVID-19, if we look at anything that you might see on a GoFundMe page, typically the start of every charitable gift is a request or an event that kind of brings forward, the need to participate. And where we see the difference in that charity and philanthropy is, what motivates that gift. And so the clients that we have that are really doing a good job of getting out ahead of their philanthropy and actually putting a plan into action are really doing it not based on request and not based on event. They've transitioned to using their experiences and their relationships to put together a plan that they can, not only, it's not a responsive plan, it's not something that is sporadic that they really can't count on. It's something that's repeatable and lasting. It's something that's valuable to them and valuable to the charities that they support and the organizations that they support. And so what we find in working with clients is that experience is such a vital component. And it could be a positive experience. Like, for instance, I was the first member of my family to actually graduate college. And so, once that happened for me, there were several members of my family after I graduated that had the ability to attend, and almost all of them attended college and graduated. So it was kind of breaking that cycle. So, as you heard, I'm a graduate of the University of Texas. And so my own experience tells me that, if I can provide some help to help somebody as a first generation college graduate, that it has, it pays benefits, not only just for that generation, but for all the generations that follow. The second thing that we kind of, that we see most likely or most often is some kind of relationship mechanism. It may not be a particular cause that, brings you to give. It may be a relationship that you have with someone who's, really passionate about a cause. We have a lady who developed a free clinic for medical and dental care in our neighborhood. And without the relationship with her, we might not have gotten involved. So what we try to do when we sit down with clients is we try to understand, number one, are they charitable? Most of our clients are, and I'm sure most of yours are as well. And where do they need help? I mean, are they making annual loyalty gifts? Are they giving only with cash? Are they giving, in response to something? Or are they giving, have they taken charge of it? Do they actually have a plan? And so that's kind of where we start. Our goal really is to take people from the left side of this chart to the right side. And when we think about a charitable gift, what we're really doing is we're thinking about two different things, mission and structure. So the first thing is mission, and mission is the why of the gift. What is it about this particular cause that drives me to want to participate? What experience do I have in my life? What changes do I want to make? Why am I doing this? And then on the right-hand side is the structure. How am I going to do it? And when you have a lot of times with our clients, we'll have one client that might be more mission driven. They're not really interested in the intricacies of how the fundings are made or donations are made, but they're more interested in the cause, who's going to benefit from the donation, how it's going to change the community for the better. But we also have clients and businesses and other parties that are involved that are very interested in getting the most out of their donation and structuring their gifts so that they get all the benefits, that are due them at the same time, that the end beneficiaries get those benefits that they're hoping to give them. And so what we find is when we can do that Venn diagram and we can say, okay, we've got a mission that our clients agree on. They know why they're giving. They've got a really good idea. They're on board. And we can help them with the structure. If we put those two things together, that is where really the impact, that's where impact really starts. And what we find with a lot of our clients or people who haven't gotten any help in that is they're missing impact because, number one, they don't have a real mission. They haven't really gotten behind and understood exactly why they're giving and exactly what's important to them. And those that have, sometimes their structure isn't, they're just not thinking about their structure, so they're not maximizing the gift. So what we try to do is look at both of those things together and maximize them together. And we start by I think the way you have to start really is to determine what that mission is. What is the why? And so we've kind of put it into a mission matrix. And what we feel like a good mission statement should be for you on a charitable mission is, number one, it should say it should define you, who we are. You know, we have clients who say we are lovers of the arts. We have clients that say we are social justice warriors. We have clients who say we are lifetime learners and supporters of education. We are healthcare advocates. I mean, a very simple declarative statement that says who you are and how you feel like the world should be changed for the better. Then secondly, you move on to what we support. And what that really means is you can have a broad, for instance, I might want to support education, but just because of my experience and my background, but I might want to tailor that support to a specific, subset of people, first generation college graduates. And so it's really important that when you're supporting an organization that not only what you support in general, but what you're seeking to support more specifically. Because as you help your clients kind of tailor their gifting a little bit more and move it from a generalized gifting to a more specific gift, you really will see some benefits and you'll see that impact, you'll see that appreciation from them. Then the next kind of quadrant is how we provide the support. So think through that a little bit. We like to think of it as doing a charitable resume. If you were going to apply for a job somewhere, the first thing you do is you put together a resume to say, what do you have to offer? We think that's a great idea in terms of working with an organization or a charity. What are your skills? What's your budget? What's the commitment you're willing to make? And really think through that. There are a lot of charities that need your help, and they need help beyond just money. They need help connecting to other donors. They need help with skills. They need help just in general in the community. And so thinking about and really listing out how you're going to provide support, beyond just the money is really important. And then finally, what do you seek? And that's a kind of a two-pronged question. This is about results. I think far too many times we give donations and, the donation goes in, we feel good about it. We kind of understand the general direction of that donation, but we really don't hear anything after that. So what we try to do is we try to work with the charities and with our clients to quantify what that donation is. It's one thing to, end hunger. It's another thing to feed 40 school children during the summer. And we try to get those goals and those results down to a more tangible level, certainly for the client, so that they can really see what it is that their actual donation helped bring about. Now, you'll have some clients that might want a more detailed impact report. You might have clients that just want a seat at the table to talk to people, but it's very important to understand from your clients what it is they want. I mean, it could be as simple as, I just want to have lunch with the development officer every quarter or so, or every 6 months. Or it could be more meaningful or more, more developed than that. So you just have to understand, as part of your mission, who are you? What are you going to support? How are you going to provide that support? And really, what do you seek in the end? And so for us, what we do, and this is the reason I think that wealth managers and financial planners are in such a good position to help people with their charitable plans. Because in general, what we're doing is we're trying to find out what their goals are. We're converting those goals into a charitable portfolio. We're allocating money, resources, and time to different charities, and we're monitoring how those gifts and how that support is positively impacting the community. And that sounds a lot like what we do on a daily basis with investments. And so I think we have a really good, I think most every firm has a really good handle on being able to do that if you just kind of turn it on its end a little bit and just think less in terms of building a portfolio and more in terms of how do you get the most impact as you start distributing that portfolio to the community, or even to family members or legacy or whatever. So what we do is, first of all, we help with that charitable mission. We have the giving allocation plan. We do the funding programs and the menu of charities. So we'll go through, and based on that mission plan, we may, provide some, charities for the client to check out, or they may provide them to us. We manage the funding process and engage the charitable support network. This number 3 is probably the key. That's probably the one area that we really pivoted on from the start of it. When we started this program, we thought, if we knew the client really well and we were able to get their goals in mind, that we would really make a difference. And what we actually found is that we also had to understand the charitable network and the development officers of the world, as well as we understood the clients, in order to really make a meaningful difference. And so what we're doing now is, when we have a client that interfaces with a new charity, we send out a notice to that charity, to the development officer, announcing the client, announcing the gift, telling them, sharing their mission statement with the charity. And think about it from a developmental officer level here in the charity. That's one of the hardest jobs you can have, because you've got, in a sense, probably 1,500 to 3,000 clients. You don't really know a whole lot about them other than the fact that they give to your charity. You can't possibly meet with all of them or talk to all of them. And so imagine, as a financial advisor, if you had 5,000 clients or 3,000 clients and you didn't really know what any of their goals were. And so that's the position that a lot of these charitable developmental officers are in. And so what we try to do for our clients, at least, is make that introduction, bridge that gap. And so that, they're not just getting that monetary support, they're also getting an introduction and, some knowledge into who these people are, how they want to support the charity, why they're here, what their commitment looks like, and what their expectations are. And we've had such a good response to that, because what will happen is, for the average person who gives a donation to a charity, what they see is a thank you letter or an IRS acknowledgement. Maybe as soon as they gave the gift, but more than likely closer to tax deadline of the next year. And in reality, you might not see any other notification or any other, nothing else, right? And with our clients, when we send these in, not only do we get the initial notification, but we also almost always get some kind of contact from the developmental officer, almost always have some sort of phone call or meeting that's set up. And so the clients feel like they're a part, they're a part of it from the start. Then once you start putting these plans into action, it's very important, at least on an annual basis, and we do it kind of on a semi-annual basis, to think about the funding of the different charities, to talk through the client and see, talk with the client and see if they've gotten have they gotten what they expected? Has the organization performed in a way that they like? Sometimes the surprises are positive, sometimes they're negative, but it's very important to just, step back and take a look and talk to the client about what that experience is. And so as you're working with charitable planning, we found 3 kind of time frames. I think every time frame is fairly significant, but 3 that are more significant that we'll talk through. And the first is foundation years, and we talk about that because we have a lot of young founders. We have a lot of people that are starting businesses, starting families. And what we're finding with our the younger clients these days is that they're not putting off their charitable mission statements. They're not putting off being part of the community until they have a certain amount of money. They want to incorporate that into their lifestyle from the beginning. They want to incorporate that into their business. And so, typically what we like to do is have them think about charitable giving as a part of their budget. If they don't have that in there, let's see where it can fit. And not only a budget from a money standpoint, but also for time. So we want our younger clients, our younger business owners to understand, okay, if you want to be a part of the community, if you want to develop a giving mindset, let's make a budget for it. Let's look for matching opportunities. There's all kind of opportunities out there where your dollar can come to if you have the time and the patience to to plan for the gift. And we need you to do some kind of an assessment of what your available time and skill are. Doing a day of service for your company or your family is always great. If you have a particular organization that you're strongly affiliated for or with, I mean, most of them will have several important dates during the year that they know well in advance where they can use all the help they can get. Establishing your annual calendar with those dates in mind is helpful. We have clients who actually build in days of service to their vacations. The other thing that you need to think about, whether you're sharing that experience with your employees or your family, I mean, try to make it fun. I mean, there's no, I had a lady that told me I guess a couple of years ago, that you can't spell fundraise without fun. And that's true. I mean, you do want it to be something that people look forward to. Like in our office, over the spring, we had everybody get together and kind of vote on and pitch their favorite charities, and it was a fun thing, not just a thing that we were doing for the community or doing for the business. It was also something that we could get together and do that was fun. And make it about family, make it a family affair, make it, give everyone a chance to get involved. There's a second, at least here in Austin, we see this quite a bit, and it's a very important time for charity. It's a very difficult time for charitable funding, and we call it retirement year zero. And what retirement year zero really is, it's that last year that you're going to work as a high-paid executive. It's the last year that you're going to operate that business before you sell it. And what you'll find is, in that last year, your income is usually as high as it's ever going to be. And your time is usually as constrained as it's ever going to be. Not only are you doing the job that you normally do, but you're, in most cases, preparing somebody to take over for the job that you were doing, preparing somebody else to take over the business. And so in this year where your income is extraordinarily high, and the potential benefit from a tax standpoint, at least, to donating assets is going to be at its highest. It's also the year where you have just the smallest amount of time to really think through what your charitable mission is. You might not even really have a good idea. The only thing you can think about is, how can I get through this year and get this business sold, and get this executive chairmanship or whatever it happens to be handed off to the next person to leave everybody in a good state. And so one of the things that Chris will look at modeling for you is a donor advised fund. And the reason we like donor advised funds in this particular scenario is what it allows you to do is it allows you to bunch your donations for a tax deduction. It allows you to gift appreciated stock. Maybe you probably built up some very low basis stock in your employee, or there's some asset that you can that you probably have available to give. It allows you to invest that gift over time to grow it, and then give those charitable grants out after you've had some time to decompress and get a better feel for what you want your charitable mission statement to be and what kind of organizations you want to support. So what it does is it maximizes the current year income tax benefit that you get, but also gives you some time to just breathe a little bit and to think about, how do we really want to do this? Can I get some matching opportunities? Can I, get to know these organizations a little bit better? So it really buys you some time while it locks in that maximum tax advantage. We also find that at this time, there's more and more people that are naming charitable beneficiaries on their IRAs and life insurance policies. And certainly, at least as even a first step, even if you're not looking at a direct beneficiary. Make sure that if you've gone through all your family members that, you want to, inherit your money or, take over the distribution of those different plans or be your beneficiaries. Once you run through all of those individuals, make sure that you at least have your charities as a backup to get started. And one of the things that we found with clients is they didn't have, not many of our clients when we started this had charities as part of their estate plan. I think probably just from talking to them, the most likely reason was just that they just viewed it as being too hard. And so being able to take the benefit, being able to change the beneficiary on a very small IRA plan or a smaller life insurance policy to include some charities, and being able to see how easy that was to do and how they could do it amongst multiple charities was beneficial. And this is something through eMoney that's really helpful when you're entering the, they always talk about, eMoney always talks about starting with the who. And so the who's not just your individual family members, it's also charitable organizations. It's really anything that you wish to support or you wish to consider supporting, over time, because when you do that distribution center and some of those other things that come along with it, you'll have those options that are just readily available to select from. So make sure you fill out that who section of everybody's eMoney plan as, as comprehensively as you can. And then the next thing we find is that in retirement, there's kind of a new giving paradigm that happens. What happens is most of our clients and most people who are budgeting for charity are budgeting based on income. And so what happens is once you retire, while your net worth may be, high enough to justify that retirement, what ends up happening in almost every case is your income goes down. And so we see this happen over and over again where people, when you think about being able to retire, you want to be able to live the same lifestyle that you lived while you were working without having to work. I mean, that's one definition at least. And so for, the spouse who, really wants to make sure that they maintain their charitable giving into retirement, that can be a paramount that can be a paramount topic for them. For the client that's a little bit more concerned with cash value and cash flow and things of that nature, it gets a little bit more difficult because you're taking a larger, charitable donation out of a smaller income pie. So what we try to do is change that paradigm and try to make sure that people start looking at giving during retirement as a percentage of net worth and not as a percentage of income. What that allows you to do is a couple of things. It allows you to really think about, charitable donations as a part of your overall estate. It makes it a little bit easier to think about those charitable beneficiaries. It makes the donations and it makes your ability to contribute a little bit more reliable and consistent. And it also focuses you on non-cash donations, because as you're looking at your net worth and allocating or really identifying things to give, you're not giving cash at that point. What you're doing is you're identifying securities that have a very low basis that might be more tax preferential to give. If you're more ESG inclined, you may be identifying securities that maybe they've done well, maybe you've inherited them, but maybe the mission of that company is not something you feel strongly about supporting anymore. And so you can actually make that donation, in lieu of selling the stock and get a charitable deduction out of it. The charity is going to sell the stock anyway and use the cash. And so there's a lot of different ways that once you start looking at this, and this is a really important thing to sit down with a client and say, I know you've been giving 10% of your income, but your income's about to change. So let's think about giving 1.5% of your net worth. Let's think about that, and let's look at these assets, and let's look at the assets that you own and decide which ones we want to give. That's a very important thing to do, and it doesn't necessarily have to wait to retirement, but it certainly once retirement hits, that's a strategy that's really helpful. Another strategy that's helpful during retirement is QCDs, and of course the rules on these things change. With the Secure Act, it's now 72, but the reality of it is, and of course with COVID-19, there's no R&D requirement even for this year, but the reality of it is we're going to have RMDs come back at some point. And what the QCD allows you to do is it allows you to take that RMD, or what would be that RMD. It doesn't even actually have to be an RMD. It can just be an IRA distribution, but it allows you to take that distribution, bypass the IRS entirely by giving it directly to charity. And so what that does is, let's say you had a $5,000 required minimum distribution that would normally be taxed. Instead of taking that money and then giving it to charity, you give that money directly through the IRA. And so that $5,000 is eliminated from your tax return. So it can be it's really suitable for all income levels. And it's a really neat thing to do. It's one thing that you should really be mindful of when you're doing this, though, is that when you get your 1099 or your clients get their 1099Rs on these QCDs, there's really not much that distinguishes just a normal 1099R from one that's had a QCD. So you just have to make sure that the client, if they're preparing their own return, or their CPA understands that what portion of that distribution was QCD, and when you're looking at their tax return to make sure that that was actually taken into consideration. You'll also want to make sure that the word QCD is on the front page of that tax return, and that you see a difference between the total distributions and taxable distributions. But QCDs are going to be with us for a long time. They're a great way to give, and there's something that really any client who has an R&D requirement can certainly benefit from them, regardless of regardless really of income level. And now what we're going to do is I'm going to turn it over to Chris for a minute. He's going to do the eMoney Spotlight. What he's going to do is kind of take you through some of the quantitative measures of some of the things that we've talked about. And we're accumulating the questions and answers that we're going to do on our end. So right now, I'll turn it back over to Chris.
Awesome. Thank you so much, James. Very insightful, very interesting. A lot of good takeaways there. So yeah, I'm going to take us and jump into our application here. And I'm actually going to start where James finished, and I'm going to start showing you how you can actually model that QCD that we were just talking about. Now, to do this today, I'm not just going to talk through the different steps, but I'm actually going to show off some of the ways that our system has built-in help to help you understand how to do these things after you're done watching this session. And to do that, I'm actually going to click right up here on the top, and I'm going to click on my help button. Once I click on help, you can really search anything that you want in this. So if I show off, our DAFs like we're going to talk about, I can show off, any sort of trusts that I've got here, but I am going to start with our QCD. Now, when I type in QCD, it actually shows me how to modify or how to model this charitable distribution. It's giving me a how-to. So what this is actually going to do is this is going to walk me through click by click with the steps that I need to do to make sure that I'm modeling this appropriately. Now, I am going to use our sample client, the Steins, our high net worth client that maybe have some charitable goals, some giving that they want to do. So that's who we're going to work with here. Now, once we get into it, it takes us into our advanced facts. And the first thing that we need to do is model the expense. So what we're actually going to be doing to this is to make sure that we can fund this appropriately. We're going to be modeling this QCD as an other expense in our system. So we click in and we add this other expense. And once we get that added, we're going to go ahead and title this QCD expense. That's how we want to make sure that this is coming out. Then I click on next. I select a type here. Again, just making sure that we saying what this is. Other works well with this one. And then we're going to type how much we want this to be. Now, this is where you've got the opportunity to say whether this is, the exact amount of the RMD or just some number that the client wants to donate from the specific account. If you want to find out what an approximate RMD for your client would be using our system, you can jump into the cash flow report. You can find that plan distributions column and then grab a number from there. But in this case, the client wants to, just donate $50,000 from an IRA that they have, and we're gonna, give it to the charity of choice here. So once I click in that 50,000, I can type next. Again, if you want this to grow, if you want that to be a stagnant number, you've got some options here. But then the other thing to execute, like James said, making sure that we're reducing their income by this, is for this deductible type, we want to say that this is going to be a miscellaneous above the line deduction. Once I select miscellaneous above the line deduction, it's going to know that now this $50,000 that's coming out of that IRA should not be included in our taxes. Then the final thing that I need to do is tell this system when I want it to start. So in this case, we're gonna assume, or we're gonna model this as about like round and RMD. So I'm gonna select age 72, and then let's just go through, Jerry's death. Ruth has some other charities that she wants to make some donations around, or some donations to. So we're gonna say this goes through Jerry's life. Then I click next, and then I'm gonna click save. Now, to make sure that this is actually coming from the specific account that we want it to come from, that IRA, we need to fund this expense. So I can click into my funding tab, and then I can add a dedicated funding source. So once I click on this add a funding source, it's going to ask me which account I would like to fund this through. So in this case, I select that asset. I want this to come from Jerry's IRA. I click next, and then I click save. Now, the final option that you have here is, because this is something that we don't necessarily want to incur other expenses because of this, we don't want to pull this from any other account. If dedicated funding is exhausted, we would like to stop funding this expense. Now, again, that is assuming maybe this client has an account that's not going to exceed this, and maybe it's not going to be able to, last this entire time. So we would just need to click on this stop funding the expense. That means that only this account will fund this expense, and if this account happens to run out, this is just going to stop. So once we click on that stop, we click on save. And at this point, we've actually created our QCD in its entirety. So the idea here is that from this point, what we're doing next has to do with what the client would like to see. If the client just wants to see the benefits on their income tax report and how it's going to affect them, you could actually be good to go and move on from here. But the other thing that we need to do is, if we want to show the client how this money will accumulate for the charity, we can build out those things. So to do that, we build out our entity here. So first we click on our entity. Again, if you followed James' recommendation and you already built your who's in here before you started building anything out, you might already have this built in. In this case, we're just going to add it here. This is where you put in the charity that the client wants to work with. We here at eMoney like working with the Campaign for Working Families, so we're going to use them here. Then you've got some other options here. So what do you want this to be treated as? Is it a public or private charity? Is it going to be a cash or appreciated asset donation? We factor all of that in. And again, we also do factor in the fact that, this year, if you are making a donation, you can donate 100% of your AGI because of the CARES Act. We've actually got that built in. So now that I've created this charity, I'm going to go ahead and click save. Now, the next thing that I need to do to make this something that accumulates assets, I'm going to add an income. So I go down here to my income. I'm going to go over here and I'm going to add an other income. And what I want to add here is I want to model this as the same exact thing that I created as an expense. So I'm going to call this the QCD income. So we're going to see it going into the charity every year. We select this as a non-taxable. You can select whatever you need here. Other works well. And then this is where you select that same amount that you put in that expense. So essentially what we're creating here is we're creating a two-part chain, the expense and then this income. So the client's going to see the money coming out of their account, and now they're going to see the money going into the charity. And that's where here, when we select this owner, we come down here, we find our Campaign for Working Families. And then now the final thing that we need to do is we want this to happen at the same time as our expense. So we're going to model that same exact thing. So from when Jerry is 72 to Jerry's death, and we're going to select next, and then we're going to click save. Now, after that, we have completed making our QCD, and we're actually showing the income going into that charity. So now for you, if you want to evaluate, how does this actually work? How do I make sure that I'm seeing everything that I need to and this did the right stuff? You can actually just come right here to your reports, and there's a couple of reports that you can show. For you, the advisor, we recommend 2 to make sure things are working the way you think they work. First, if you want to go into the ledger report, this is actually a great way for you to make sure that the money's going in. It's the exact number that you expect. So if I go to the next year, the first year that I have that expense and that donation, we can see that because we've created a charity and there's action in their core cash account, we see the beginning of the year with nothing, and then we grew that $50,000 by inflation. So now we're seeing that 51. Then I could continue clicking on and we could continue to see the net effect of that. Now, the other thing that you can do is that if you actually want to see what this is doing to their income tax report, you can come in here and you could actually find your income tax report, and you could go in and you could find your above the line deductions, and you could see this charitable gift reducing their gross income, just like you would expect. Now, to show this to the client, the way that we actually recommend best is to not use any of our classic reports, but to actually leverage the distribution center. So if we come here to our plans area, we can click into our distribution center. If this is the first time you're talking with your clients, you've got the ability to, work through any scenarios you might be dropping in. You can work through any time period, so looking at any point in the future. So with this, I actually want to say, what is it going to look like by the time Jerry is set to pass in our simulation? How much money will this charity have gained because of this charitable contribution? So I'm going to go out to our first death year. Again, I could talk through any of these pieces. Everything is interactive. I could click into any of this. And so if I really want to see what happens, I can actually click all the way out to my overview, and you can see that we've actually got 2 places where we show this off. Up here in our out of estate to our charities, or the one that really pops for the client is down here. That $50,000 a year that we've donated to our charities amounts to this $1.2 million. Now again, I just created a very simple plan here. So if your client has more than one charity, they're doing more than one thing, there might be lots of factors that are going in and creating this and showing this charitable contribution. But in this case, because we just have a very simple estate plan, a very simple charitable gift that we're doing, we're seeing that this is that net effect of all those gifts that we've created. Okay. So jumping over then, the next thing that I want to show you, and I already kind of previewed this, is I'm going to show you that DAF that James explained. And to do that, I'm not actually going to do it in the app. I really want to show off the power again of our user guides in our help menu. So in this case, this isn't going to be an interactive user guide, or this isn't going to be a how-to. This is just going to be one of our standard user guides. So we know that advisors like to work and like to learn in different ways. So we meet you where you are. So we give you a bunch of different options. So in this case, this is where we've got the ability to create that donor advised fund. So to do that, we just click into our facts. Then we would want to add that charity again. So in this case, we create this and we call it the donor advised fund. Once we create that charity as donor advised fund, then the other thing that we just have to do is we have to go in and we can either create a new taxable investment, or we can take any other taxable investment that we already have that should be owned by this, and we can title it owned by that donor advised fund. Once we do that, any contributions that we've created in the past, we could go in here and we could affect through our tax mode. This is where we could put our charitable gift carry forwards. And then anything else that we contribute to that in the future. So a transfer, like we're doing here, from core cash, from any other account that we want, if we make it that destination, that DAF account, that will now calculate all the appropriate things that we need it to. And to see the value of that, at the end of this user guide, we show you that to see the value of the DAF, you can go to the detailed balance sheet, the out of estate report, and see how much that's worth. And if you want to see those income tax deductions, you can again see them in that income tax report. Now, the final thing that I want to show off is one of our newest features here in our user guide, and these are our interactive user guides. So now what I showed you in those first two things are stuff that you really need to know exactly what you're looking for. You know that you want to create a charitable contribution. You want to know, or a qualified charitable contribution. You know that you want to create a DAF. But if you're just not sure what exactly our capabilities are around trusts and partnerships, around doing some things like this, if you just type in the word trust and you find this interactive user guide called Trusts and Partnerships, this is actually going to teach you just a lot about our trust and partnerships in our system. So we made it very workflow friendly. So you can click here on this begin, and now it's just going to walk you through all of the information that you need. Really, this works as an easy way. You just scroll, you read what's on the screen. There's lots of ways to interact. If you want to make things bigger, you can click on it, make it bigger, or you can click on continue, and then it's going to start walking you through all of these different pieces. Now, as you're clicking through, you've got lots of different ways. So in this case, this is allowing you to expand it. And then what we actually do is we actually go ahead and give you some of those common things. So like I just showed you, how do you create a DAF? Here's how you do that. There are no beneficiaries for a REB trust, can't use transfer flows, retirement trust cannot own retirement accounts, some common estate planning issues in our system and how to solve them. And then we even go as far as to help you set up some very specific and common things by showing you here's what we're doing, and then here's how to actually do it. So you click on that start, and now it's going to walk you through each one of those steps. All right. So I'm going to turn it back over to James, and James is going to finish up with just one or two slides here, closing our presentation before we get to questions.
Thanks, Chris. And just one point of clarification on the QCDs and RMDs. Although the RMDs were moved to age 72, the QCDs remained at 70 and a half. So just for a point of clarification on that, just to make sure that everybody knows what's going on there. Just in closing, a couple of practice best tips and to-dos and takeaways. I love that distribution center that eMoney has with the graphic, showing the money that's going to charities. If you do nothing else, go to each one of your clients' files and see, or go to each one of your clients' eMoney profiles and just take a snapshot of what that looks like. Do you have, are your clients actually giving any portion of their estate to charity? Are they actually doing some of these advanced things? And what we found in a lot of cases is we had clients that were that were very charitable on an annual and ongoing basis, but had not taken the time or had not done anything to model charitable beneficiaries into their estates. And when we asked them about that, when we basically just put it to the client and said, it's a little unusual that somebody who's been as charitable as you your entire life is choosing not to be charitable at death. What's the rationale behind that? And in many cases, the client would open up to us and say, well, it was just so hard to develop our estate plan in the first place that we don't really want to go back and redo it. We'd love to have, we'd love to give something to charity, but it just feels too hard. And so one of the things we can do as advisors is kind of break down that wall and help them do, an easy thing, help them add maybe a small beneficiary to an IRA, something that they can do with, a limited amount of paperwork and a limited amount of hassle. And really kind of what we found is when clients, commit a portion of their estate to a particular charity, that really helps the engagement. I mean, they're really, the likelihood of them being more engaged and getting more impact out of that association is much higher when they, crossed the bridge and made that, made that distinction. The other thing I would think that is important from a firm perspective is this is really fun work for people to do. If you're looking at hiring out and adding to your staff, and maybe you don't have, a complete role, a customer service role or a customer care role for, a complete position. Having a charitable community liaison within your firm is something that, is really kind of a neat job description to have. It's very important. It's just absolutely vital to help you and the firm kind of understand what's going on in the community, what's going on in that charitable world, and having that contact. So that's kind of a neat thing to think about. And I would, the last thing I would leave you with is, I don't think I've ever had a client come up to me and say, thank you for the 10% 10% return on investments, or, thank you for this, or thank you for that. But I have had, almost without exception, clients come to me and say, thank you for actually, taking the time to help me, make my gifts really mean something, both to me and to the community. And so that, that to me is a huge reason why we do what we do. I think we have a lot of clients who are struggling with, with how to do that, and they need our help. And I think if we're willing to help and willing to staff up and willing to use the tools that eMoney has to help us illustrate that, we can really add another service quiver to, our wealth management service profile, which we're all looking to do, on some level. And we can really provide a meaningful layer of help, not only to the clients that we serve, but to our community and to the world at large. So that's what drives us to do it. And we appreciate you for the time today. And I guess we'll take this time to answer some questions. That sound good, Chris?
Yeah, that sounds perfect. We've actually got 2 questions for you right away that I want to get into. So the first one comes from Sunny. Thank you. Can the QCD be invested into the DAF instead of directing it directly to the charity?
No, it cannot. It has to go directly to the charity.
Perfect. And then the other
one thing we've used QCDs with, and this is kind of an interesting side note, is we have quite a few clients that donate money to the University of Texas, because obviously we're in Austin, and there's a lot of graduates here, and we've had really good success with them of with the university profile of having that QCD money go to the university, and then the university can actually turn that into multiple gifts and multiple different departments and things like that. So that would be something that would act similar to the way maybe a donor advised fund would act, but other than that, the QCD has to go directly to the charity.
Perfect. Thank you. Now, the other question that we got here from Tess was, how do you do your research on foundations depending upon your client's cause? Yeah,
so the first thing that we'll typically try to do is make contact with somebody who's affiliated with the organization. I'll give you an example. We had clients that wanted to take part in stopping the proliferation of guns. And they had a particular charity that they had been giving to that they just didn't feel really, met what they were looking for. And so we started out, and sorted through the Charitable Navigator sites and some of those, some of the rating sites to kind of get a short list of, organizations that kind of matched what they were looking for. And then we were able to reach out to those organizations, and you'd be surprised at the level of detail and response that you get. And I think from that point on, it's more, most of the charities, at least, most of the larger ones will have full impact reports that they can provide you at any time. But what we find is a little bit more helpful for most of our clients is just that relationship component, just, having an actual name and a face that's affiliated with the organization, where you can reach out, send an email to, shoot them a phone call, and just ask them a question. And so to us, being able to connect the person to the particular charity is probably one of the more important things that we do. And instead of trying to determine what's important or not important from a research thing, you'll see all the Charitable Navigator reports and everything will have, they have their, their way of evaluating a charity. It's not necessarily the only way to think through it. And so, for instance, we had clients who donated to a particular organization and the donation didn't go toward any of the end causes. It went to an event that was only designed to increase membership. Well, those kind of events don't get the treatment that they get on the Charitable Navigator scorecard and some of the others isn't great, because those formulas kind of want as much of the dollars going to the beneficiaries of the charities as possible. And I understand that. But when we realized that when they hosted that first event, I think the organization had 100 members, less than 100. This last year, they hosted it for the 4th year in a row, and the organization has almost 700 members. And so, the idea that, yes, their initial donation might not have gone to any of the end beneficiary organizations or causes, but what they did is they actually allowed their organization to leverage, and grow membership by 5 or 6 times what it was when they started. So there's different ways to have impact, and I think it's the experience and the relationship. Those two things are huge. If you've got both of those, you're going to have a client that's very energized and engaged, and you're going to have a charity that's continually reaching out to them and making them feel a part of the process.
Awesome. And then one quick note, we are going to send a link in the chat. So if you just are interested in getting an eMoney demo today, we are going to throw a link into that chat so you can have someone from our sales team reach out, and they can talk you through and get you a quick demo of eMoney going. So if you want to hear more, we'll be able to take care of you that way. All right. I think we've got time for one more question here. So I think, James, the question that makes the most sense here is, what lessons have you learned in your experience, time doing charitable planning, and what do you wish you knew then that you know now?
I think 2 things in particular. One is, I wish we had put more emphasis in involving the charitable community in what we were doing to begin with. I think it's more of a triangle. If I visualize it, it's really more of a triangle. It's the advisor, it's the client, and it's the charity. And the people that the charitable development officers of these different organizations are exceptional people. Nobody's ever going to know the organization better than they do. The one thing that we can do as advisors is we can help them know our client. And when we do that, when we bridge that gap, we're doing something that very few other firms are doing. You have to realize that these charitable officers are extremely busy, and they're really focusing on their internal mission. And so the easier we can make it for them to understand what's important to our client and why our client is participating that's really the most important lesson that we've learned. The second thing is start small. There's an old saying, how do you eat an elephant? One bite at a time. And the charitable planning is exactly the same. Do the smallest, easiest, most expeditious thing you can do to start the momentum of the process going. If you try to eat the elephant all at one sitting, it's going to be very difficult. There's just too many things to say no to. There's too many hesitations. So I would say go slow, do the easy thing first. The hard things will always be there, and you can build some momentum to tackle them. And then the second thing is make sure that you involve not just the client who's making the donation, but involve the organization that's receiving.
Awesome. Thank you so much, James. And that about wraps it up. So one quick note, in closing, we do want to remind you that 2020 eMoney Summit is going digital. Please, from 13th to 21st for 3 jam-packed days of exclusive research on how to bring power to the plan in today's world. Best practices for leveraging technology to improve your business, continuing education opportunities, and in-depth eMoney training for every level of experience. More information and registration details can be found at eMoneyAdvisorSummit.com. And that brings us to time. And thank you all so much and have a great day.
Thank you very much. Thanks, Chris.